How's it, guys? Welcome back to FX Rhapsody. Today we are going to be looking at VIX75 or Volatility 75 Index. I'm just going to show you a little bit of how I tackle the charts when it comes to VIX and how I trade it, and yeah, a little bit of Fibonacci, support and resistance, that kind of thing. So let's just get stuck in it. First of all, I always trade or look for the trend on VIX. Start off with a blank chart and then go to the higher time frames, your daily. But mostly I go to the 4 hourly, go down to the 1 hourly, then enter trades on the 5 minutes. So on 4 hourly time frame, what I do is I look at the chart and I take out my Fibonacci. So what we can see here is that we can see that VIX is slowly but surely in a slightly upward movement to the top side, or going up in a bullish movement basically. So trading it with the Fibonacci, just want to show you. So basically you take the Fibonacci tool and then it's just a retracement, the Fibonacci retracement from the low to the high of where you can see this the movement takes place. And as soon as you see a downwards movement, you can literally just start drawing on your fibs. You can see that VIX tends to retrace back to the 38.2, 50%, 61.8%, and sometimes even the 78.2%. Those are the lines that it retraces back to. So a lot of people say, like, which one do you think, or which one is it going to retrace to? Is it always the same? It's not always the same, but don't predict the market. Just react to what it's giving you. So once you draw your Fibonacci in, if you see this low or this downward movement happening, or the retracement basically, put your Fibonacci in, on the 4 hourly, then you start drilling down to the lower time frames, because that's where you're going to enter your trades, correct? So once you drill into the hourly time frame, let's just have a look here. Let's just scroll back a bit. Okay, just expand it and you can see better. So basically what happened was it made this huge push to the upside. It started rejecting the upside and then it started moving down. So on the lower time frames, you can see this bearish engulfing basically candle that formed, meaning it was time for market to shift, and basically the sellers climb into the market and the price moving down. Then it started with a bit of a retest to one of these lines, like you see the 38%, and always wait for your hourly candles to close. Don't just assume when it breaks through, assume it is going to go down. Especially with VIX, it will always pull back, and like you see this one right here, it closed right on top of the 38.2%, which was a good indication, but do not enter yet. You can see this bullish candle forming, but volatility index it likes to come and retest that area again. So basically what I tend to do is I wait for a little bit of a breakout, as you can see over here. So basically it consolidates a little bit and a good friend of mine always said, as soon as it comes to a line, if it does not consolidate a little bit on the line, it is not a true Fibonacci retracement. So when it comes to a certain point in the line, be it the 38.2 or the 50% or the 61%, and it bounces off it, and it bounces and retests again, then you look for the entries. So then again, you scroll down to the lower time frames. I like going to the 5 minutes. I've just highlighted this section here for you. Let's just wait for this chart everything is so slow today, Friday. Okay, let's just scroll to that section where we've highlighted. There we go. So here you can see this consolidation, or this range the market is in, especially on the 5 minutes. So you can see it coming to the bottom, it's retesting it. A lot of people just trade this, but over here is the key. As soon as it starts making this lots of candles and consolidating here, I like to wait until it breaks this area. So from the higher time frames that it is bouncing off that 38, so you're expecting price to break out and move to the upside, because it's retraced back to the 38, but you're waiting for that that sniper entry, if I can say that. So basically what I do is I wait for this 5 minutes. You can see these candles bouncing up and down, and as soon as you see these huge candles forming, you can see all these little small little candles still indecisive of which way, and then all of a sudden a big movement, big retracement, enter, and off she goes. Do you understand? So basically that's the way I trade it. If I have to go back to the 4-hour time frame, I mean, guys, again, you know, all these things is, I'm just showing you the way that I trade. There's lots of different ways to trade, but I mean, you know, not every way or everything that I show you, you will find helpful. But again, this might help other people, and especially guys trading with the Fibonacci. I love trading with the Fibonacci. There's just no other way, especially with volatility index. Okay, so we've seen this up, going down, retracing up. So then there's a big move again to the upside. So you can actually, I mean, this is 4 hours, so the movement's quite high. So you see this movement, and as soon as you started seeing this, you know, movement to the downside, you can see Fibonacci from the low to the high, come back, retrace. It actually hit this 50%, pulled back all the way, then it came down again 38%, 38.2%. Stopped right there, and poof, you enter. Lower time frames, you enter, and it moved basically to the upside. Over here, this was, oops, wrong one. Over here, you can see that market went up, started reversing at the top, came down, hit the 61.8%, consolidated here a little bit, actually broke through to the 78%. So this was kind of a, I wouldn't say a dodgy trade, but again, I mean, you could have made some pips on this one. Again, waiting for those candles to close. Just wanted to highlight here. With the volatility index, I don't stay in trades very long. I take what I want and I get out of there. But this, you can see the big movements forming. So right over here, 1 hour, you can see this movement, poof, to the upside. Then it went down again, then it's back up again, then it went down again, and eventually it shot up. So this would have probably been a losing trade. If I see this trade going through it, I would have just, you know, there's not enough consolidation happening over here. You can see it breaking out. So I would have probably lost the trade and not, you know, not carrying on. But again, another thing I want to show you, you don't just, and same with me, I don't just rely on my Fibonacci retracement. I mean, there's so many other things in the market, you know, giving you confirmation basically. So let's just run back, and I want to show you this. So over here, let's just scroll out. Over here, you can see this basically, where's my trend line? There we go. You can see that the 4 hourly, I mean, the more you trade it, or the more you draw these lines, the more you'll see it. You can see it's been respecting this trend line over here. So that's a definite trend line. Fibonacci like to make candle patterns basically, or price action patterns. Just wanted to draw this here. Let's do it over here. There you go. So another big support and resistance over here. You can see it tapping it, not breaking through it, you know, almost broke through. You can see it on this side as well. And if you scroll out even more, you can see, if you draw it slightly to this side, just wanted to make it better. There you go. You can see that this area came down and it touched this area, came up, broke it a little bit, retested it, up again, almost touched it, not breaking through, breaking through. So volatility index is very structured, guys. It follows structure basically almost to the T. So not a lot of fundamentals, you know, running the show here. So, you know, price action is key to volatility index, and the more you trade using price action, the better you'll get. And I mean, the more money you're definitely going to make on this tendency. So currently what we're seeing is that the price is in this rising triangle basically. So what we want to see is, especially with a big movement, volatility index, it might still bounce up and down this area until what I'm expecting it is obviously to break to the upside, come back, retest this area over here. Now guys, bear in mind we're in the 4 hours, and then it's gonna do that huge move to the upside. And if we have to scroll out, what I mean by huge move, it's gonna make something like this. Whoops. It's gonna do that movement, basically. Let me just, that movement. That is what it does. As soon as it breaks out of a ranging phase, it will move. And as soon as it moves, it moves. And the guys, especially you guys, I mean, look at these big moves that happens. Look at this. Look at this big one on the 4 hour. Catching that is big money, guys. So this is what we're looking at. So we're definitely looking at this big buy for volatility index. But again, we're just waiting for this big market structure to be broken. This big resistance currently. And to have a retest on it. And then bam, we're in it for the buy. So guys, that's just a little bit of a overview on how I trade Nasdaq. Is not Nasdaq, volatility index, sorry. But you know, practice it. I will definitely make more videos on the Fibonacci's, on the volatility, but this is just a quick overview of how I look at it. And yeah, just watch out for more of these ones coming your way, which I will definitely go more in depth into using my Fibonacci's and the retracements, and also looking at the ABC patterns. I mean, all these things falls part of trading volatility index and making the best out of your entries and to getting those nice long positions. Guys, I hope you have I hope you're gonna have a wonderful weekend. Like this video, subscribe to my channel, hit that notification bell. There's some more analysis coming your way this weekend, and I've got some very interesting videos that I still want to post yeah, when I get time. Guys, yeah, again, hope you have a wonderful weekend. Happy trading.